Now, earlier we covered the other concepts. Now, let us continue with the new concept that is fund relation concept. As per the relation concept, the every accounting transaction is valued or calculated based on the realizable value. So, we are compared and covered that if the market price and cost price is there, whichever low we are recording. But in case of relation concept, we follow the accrual principle based on the profit or based on the price which is paid by the customer, we will be recording in relation concept. Then we talk about the matching concept. The matching concept is parallel to the dual aspect, where each debit is having its similar credit. So this concept is based on accrual accounting method. Now, what is the accrual accounting method? We have discussed many times. Accrual accounting indicates income or expenditure, they are received or receivable, whichever is the first, we have to record. For every debit, there should be some credit, or for each transaction, there should be two effects. For example, if salary is payable for 12 months, and if 1 month it is paid late or paid in next month, then even though it is paid in next month, but it was due in this month, so it is called outstanding. Same way, if the income is paid in advance, which is due next month, it is called as a prepaid income. So this concept helps us for two things. One is the what is the meaning of outstanding, and second, what is meaning of prepaid. So in short, the expenses amounted which is prepaid or outstanding, they should be recorded based on their arrivals. If I received an income in advance, record that day. But if income is not received, but due date was there, then I have to record the as per due date. So far, we have covered the various accounting concepts. Anybody has till date any doubt of in any accounting concept? Any accounting concept shall I repeat? I think there is no doubt because no has putting in chat box. Let's move further. Now we talk about accounting concepts. The accounting concepts are a foundation guidelines which are very crucial and essential for writing the accounts. They are considered as benchmark how the account is written, how the account is maintained, and how the account is followed. So let's continue. The accounting conventions are those rules which is followed as a practice. For example, when you want to start your scooter, the you need to put the key, you need to have petrol, and you need to put and self start, or you used to have the kick to start the particular vehicle. I'm talking about two wheeler. But suppose even the guidelines are given, and I'm not able to follow the guideline to start my vehicle, then my vehicle has the issue.
Then
I'm doing the practice to start the vehicle as per the process, as per the format shared. So if the vehicle starts, it's okay. Suppose there is no petrol, then what is the things what I should follow? Then in this case, if I do not have petrol, then normally I will ask my friend, I will ensure the roadside person that he will help me, or I will just push my bike and ensure that I will reach to the nearby petrol pump where I can refuel my particular two-wheeler. So the vehicles when I received, they will teach me how they are to be used, not to be drive somewhere, not to triple seat, double seat, and something. So these all things are given by accounting concepts. But if I am driving vehicle, suddenly somebody comes in front of my two-wheeler. Shall I put the brakes or shall I just drive the vehicle? These are practices. If there is a red signal, what need to do? If police ask to stop you, what you are going to do? If the people are shouting at you and you have to follow the discipline, what you should do? So the common things which we need to understand or observe are given by the accounting conventions. Whereas how to use that two-wheeler, how to start, how to put it off, how to use the gears, everything is mentioned in accounting concepts. So accounting concepts are a foundational guidelines, whereas accounting conventions are suggestions to operate in a particular situation, to operate to solve the particular issue or problem. So accounting concept is a foundation which leads how, when, where to act in situation, and we need to follow the conventions as our regular practice. Now, in case I do not follow accounting concept, what will happen? If I'm not following the accounting concept, it may result into misappropriation and incorrect recording of accounts. But when I do not follow accounting conventions, it may trouble my proper system. But even though I have alteration to conventions, I can work out. So universal rules to follow for a particular act is accounting convention, whereas the particular instructions, formats, or the method to be observed is accounting concepts. The first accounting convention talks about materiality. So, as per this concept, whatever the events, whatever the things which I am recording should have evidence, should have facts and figures, and should have proof of happening. For example, tomorrow I go to the Navli Bridge and just decided the person who will break the signal, I'll give 10,000. So two, three people break the signal, and unfortunately, the police caught them. If they declare that the fine will be paid by me because I declare this is an event and you need to do it. So they have to approach the police, but they need a proof that I have said to perform this illegal activity. Secondly, if you remember the law of contract, it is always said a contract is valid if the consideration is valid. Now, what is the consideration? It is exchange. That I will do something because you will do something, or you exchange with me something. And this consideration is nothing but a materiality for any contract. For example, if I'm purchasing a flat, so whether the builder will give me the cement, and other particular construction material? No. He will construct a flat and he will hand over me the key of the doors, which make me enable to buy that flat. So in this case, the receipt of flat purchase or possession letter and the keys of door is a physical evidence that I am owning the flat. So if I want to record a transaction that flat is purchased, I need to have the agreement signed in my names. I need to have evidences that I have paid the amount and the purpose of that amount is purchase of flat. So as per these conventions, if there is no significant evidence supporting documents, supporting vouchers, and proof that I have made the payment for a particular purpose, the transactions and the facts they are not correlated towards that issue. For example, I purchased a flat from my friend who is a good builder. So he gave me the flat instead of 1 crore in 80 lakhs. But I have given him everything in cash. So there is no evidence that I have given the money for purchase of flat. There is only a lease agreement, but no purchase agreement. In all these cases, if I enter in lease agreement, then even though I'm a owner of flat, it is not recorded on my names because it is a lease agreement. So I purchase something, I sell something, I get a commission, I pay the interest, I receive the dividend, or I receive something. Every transaction should have a proof, should have evidence, and that evidence will serve for calculation of the value, calculation of the relations, and calculation of that particular accounting in accounts. If suppose I don't have evidence, so in absence of evidence, I cannot relate that transaction towards the particular accounting rule. For example, X purchased from his own factory 10 kg of ice cream for home party. Now, he has purchased the ice cream or he has withdrawn the ice cream. There are two conditions. If suppose he's a good gentleman, he don't decide to buy anything free. He approached to his gate and offered some money and purchased the ice cream. So, in this case, I can check his receipts and payments, and on that ground, I will decide what is the nature of expenses. Suppose he has paid the money, it's a mere purchase transaction. If he has not paid the amount, he has just taken the product, I need to consider as drawing because here the evidence of payment is lagging. Here, the nature of payment is shortfall to give and proof or evidence that I have purchased an ice cream, I have not consumed the ice cream without payment. So the materiality concept talks about how and what transactions I need to do it. So let me illustrate the materiality concept. The company XYZ bought 6 month stationery worth rupees 600. Now, if the company has bought the stationery for 6 months and the value is 600, then question is whether should company divide the expenses for 6 months or it should charge to 1 month. Now, when the company has purchased stationery, the evidence indicates that this is one-time purchase. Whether I buy it for 6 months supplies or I buy it for 1 month supplies. The supplies which I purchase, they just belong to the supplies. For example, in a whole month, I require 10 kg of rice. I go in shop and purchase 10 kg. So shopkeeper will offer me the particular 10 kg of rice as single purchase. He will not bother whether I purchase it for 1 month or purchase it for 2 months, 6 months, or one day. For him, it is a mere transaction that rice is purchased and cash is given. So, if unless and until while recording the transactions, I don't have evidence that this is for 1 month, the transaction is recorded for a single. In this case, I purchased the 6 month stationery for 6 months, but if the amount is small, I can ignore. If the amount is large and while purchase, I have some evidence that this is for 6 months, or I make a statement, this is for 6 months, then I can divide it for 6 months. The better example is when we purchase any fixed asset and we start calculating the value of assets or its residual value. In that case, the residual value is calculated based on scrap value and its repurchase value. So if I calculate the depreciation of 10,000 and value of asset is 5 lakhs, so the value of asset is 5 lakhs and I'm calculating each month as 10,000 depreciation. Can anyone tell me what is the life of asset? Yes. So for that, I have to divide the 5 lakh by 10,000. So these three zeros and the three zeros are gone. So I have calculated the life as 500 years. Sorry, 5 lakh divided by 10,000, it is 50 years. So my asset has a value of 50 years, and now I can break down the depreciation for 50 years. So in this case, the concept as the amount is so small, it is immaterial to be written off in 1 month or in 6 months. But if suppose this supplies is 60,000, so in that case, I have to create an evidence. I need to have proof that amount is distributed for 6 months and each month it is 10,000. If the amount is 6 lakhs, again I need an evidence that it is distributed. Now, what is the proof here that it is for 6 months? Because on the invoice of purchase, it is never mentioned that I'm going to use for 1 day or 1 month or 1 year. So, in this regard, the evidence will be the resolution or the purchase quotations which I'm having. Normally, in purchase quotations, I will enter into terms of contract that you should supply me for 6 months, then it is for 6 months, or it is stated that XYZ company is interested to buy 6 months supplies amounting rupees so and so with the following terms and conditions. So one is the quotation, second is the contract between two parties for supplies, and third, the journal entries or the vouchers which are passed. So these are the certain materiality evidence which I need to take in cognizance before recording the transactions. If the materiality is ignored, then it might possible that the supplies of this much amount is for my personal purpose, it's for my friends, and it also may be for a certain different reasons. If I'm using a company's car for my family as well as for business, then I should have proof that how much car is used for my family and how much car is used for business. In case I don't have evidence, then it will be rational to get the expenses divided as 50-50, that 50% is for business and 50% is for personal. So in that case, whatever the expenditures made by me on that car, I can only get 50% reimbursements because I don't have material evidence that the car is only used for office purpose. In materiality concept, we need to observe that the event, the payment, and the recording has an proof or logical evidence. Why we say logical evidence? Because sometimes the financial transactions we are following just a payments and receipts. We never narrate the purpose of action unless and until the amounts are larger one. Please go through the slide. I'll take a pause of 1 minute. So we just covered our first convention, that is materiality. Whatever the things, whatever the events, whatever the supply of goods or service, you need to record only based on evidences available. If the evidences are not direct, then you have to take a judgmental call based on situation, what will be the nature of expenses and what are the proportions or amounts to be recorded. The best example is, suppose my father gift me a bungalow, so I don't have any purchase consideration, but the asset belongs to me. In that case, it can be considered as a gift or it can be considered as a purchase. So the evidence of gift or purchase is an conveyance deed or the agreement of purchase between my father and the seller, or it is an conveyance deed or declaration with an executive bond paper about the same. So I need to furnish the proof that the flat is purchased by me or my father or it is gifted to me. Now, why material concept so crucial? Because material concept gives me evidence for each transactions. For example, what is the proof that you are doing a OJT and you're not using the plain AI? The simple thing, we always ask you to have the geotag photos. That geotag photos will give an idea that you have gone to the company, you have gone to some organization, and you have collected data, and now you are processing that data in the interest to meet your objectives of OJT and finish it in time. So that geotag photos are the evidence that you are working on your internship. If you do not have photo, if you do not maintain the diary, then it may assume by the examiner that this is overnight project and there is no evidences that student has actually learned something or the student has actually contributed something. So the contributions made by student, the value proposition made by student, or the claims about growth, liberty, or achievements need to be justified by a materiality concept. So the materiality concept talks about every transaction, every account writing practice should have supporting documents. Without any supporting documents, writing the books of accounts is an false evidence, and lack of evidence will again create manipulations, errors, and it will be highly charged with the penalty and fines. Let's move on to the other, full disclosure. Now, what is disclosure? Disclosure means giving the detailed information. Disclosure means if I'm presenting something, normally the slide is containing 5 to 6 lines, but I should mention in attachment or explanation what I want to say for. I just write current ratio equal to CA divided by CL. Now, it is well understood by the MBA students because we have read these terms and conditions. For example, in our college, when we ask you to write an application, some students they write it as respected sir and they write respected madam. When they write it sir, it's a complete SIR. But many students they write madam if the maternity evidence are not relevant, the disclosure is incomplete. The disclosure will not give an idea about what and why the things are there. Now, when we talk about the next part, that is financial statements, or if you come across any clear balance sheet of any company, you will understood that it always contains some annexures, or your field project was having annexures. Now, why your field project is having annexures? The simple and foremost reason that these annexures are supporting documents. So we are suggested the many students to put it in annexure the questionnaire. We have suggested to have geotag photos and also the proof or evidence that you have worked it. It's not mere copy paste from somewhere. So considering all this, if the disclosures are not mentioned, I cannot understand what is the balance sheet and what are the contents of balance sheet more clearly. So when I'm talking about the disclosures, they are the summary of representing the something which is essential. So let me share the one report of Bajaj Auto. Now this is a report of Bajaj Auto Limited for 25-26. Let just blindly scroll it. So here there is the pictures and so on. I'm just actually accessing the report. I click read more and let's read the now you can see that the numbers are growing up. So they are talking about the growth. They are talking about growth in different sectors and so on. Then there is a chairman's letter, key products, and annual report at glance. Now, my dear students, here we have learned in my own accounting that it is always a trading account, profit loss account, and balance sheet. Now, where you find trading account? Any guess? In this report, where you will find the trading account? Here, the Maimon account discussion analysis. Let's click and see. So they are given the details about their achievement, revenue, and so on. But did you find profit or loss here? Did you find the particular format of balance sheet? They are just given an annual report to indicate the growth. Anything you're finding, profit and loss? No? Now, let me show you how to find out the report. In this all report, there is something called as director reports. So let me go to the home. In all this case, the report is an just illustration about the growth what they have. And if I click here, consolidated balance sheet, then I will find out something which is useful to me. Like I have current assets, I have fixed asset, and so forth and so on. Now these are the consolidated statements. If I want to check, it is mentioned at loans. Let me zoom it for you. It is mentioned as loans, and let's forget the invoices. It was something 7,936, and now the loans in second year are 3,465. Now, how will understand which loan, why the loan is taken, and how the loans are dispersed. So, in that case, there is called notes to the financial statement, and this notes is nothing but the disclosures. Suppose in this case, I want to talk about other income. This is my disclosure that what are the other assets? I have interest, I have surplus, I have tax refunds, I have bad debts recovered, so far and so on. So, other income, I have the details about what the things are explained in balance sheet. So, the full disclosure convention talks about when I'm writing the statements of accounts, when I'm calculating the profits or loss, or when I'm mentioning any facts and figure, it is having materiality thing, it is having proofs, and that proofs are disclosed along with the numbers. Because if I do not disclose the proofs, then trust and confidence that the things are do exist will not be there. So in this regards, the disclosure concept convention talks about that everything mentioned in accounts, every facts mentioned in accounts should have evidence, and that is need to be disclosed to understand the layman. So in our financial world, disclosure is disclosing the relevant information which is crucial, essential, and factful to understand the numbers given. It is very much important to understand how, when, where the what transaction is imparted about. For example, some days back there was disturbance in Tata Sons. Now each family has a different quarrel, but Tata Sons is combined of a trust which is operating as a charitable trust. So when they have the differences about distribution of ownership, sharing of profits, or deciding about the managing director of Tata Sons. So in that case, the whatever the proposals, thoughts, they are put it in the court. The court will ask them, give me the evidence. You say that this is right, this is wrong, give me the proofs. And these proofs are the disclosures or declarations made by individuals. So if today I want to say that I'm going on moon, I need a disclosure about my expenses, about my path, and so on. If there is no disclosure and mere statement, it is not supported by fact and figures, then these mere statements will be considered as just a time consuming. For example, The weather forecast declares it's a red alert. But when they declare the red alert, they mention a disclosure as per the analysis of weather conditions by satellite images. When you invest in mutual fund, when you invest in a financial activity, you will find the disclosure of risk is given. What is that disclosure? That disclosure denotes what are the possible benefits you can get it in that financial investment and what are the possible risks which you may face if you invest in that particular financial concerns. So the disclosure concept convention talks about disclosing the facts and figures with supportive evidence so that the person who is referring the information, the person who is using the data, he can comfortably analyze, evaluate and interpret the results in the parallel lines. If the disclosure is incomplete or improperly having contents, it may lead to the different conclusions and it will interpret other way. Let me give an example. I got my bike punctured and unfortunately the bike has punctured in front of a restaurant. Now if I'm sitting on a bike waiting somebody to help me, so you look at me, you come to you just see a sir is standing in front of a restaurant. What is your first thought? Sir has come with family and waiting for his friends. Second thought might be sir has finished the food and now he's waiting for friends to finish. Or you can just think sir is giving party and waiting for the friends. So whatever thoughts you're making, they will be continuous and unlimited. Unless I declare when you meet me, I'm just waiting my friends for my punctual two-wheeler, you will never understand what I'm doing for, what I'm interested for. So the disclosure here serve the purpose to make me understood what the things or what the numbers are meant for. What is the purpose of that transaction? Let me give another example. You go in any friend's marriage and you just go there and have food and come back. Whether your friend will remember that you have come for the marriage? As a disclosure, you go on a stage, click some memories, keep it in status, or send your friend that image that look, I was there and it was a nice ceremony. So that image, that memory is your disclosure of attendance. So disclosure concept, so disclosure convention declares that whatever the things, whatever the activities or whatever the transactions, they should have appropriate declaration about the proof, event or activity which support to have the reading to evaluate, to retrieve, and to understand what the things are meant for. So I hope I clear about disclosure and materiality. Materiality is a proof, and disclosure is disclosing that this proof is related to this thing. I give a simple example to remember the disclosure materiality. You are supposed to submit the project that is created by you. Now, what is the proof that this project is not copied? Suppose you're submitting desk research or submitting an field project or submitting OGT. What is evidence that this project is true and made by you? The first thing, your declaration that whatever the facts and figure mentioned, they are true as per my knowledge, and it is my personal work, not copy or paste from any other source. So we have declaration in field project. Secondly, we ask you to attach the sample questionnaires. We ask you to attach the references. We'll ask you to attach a geotag photos of different dates where the company and the person who doing research is disclosed. So that is the proof. And on that proof, I can disclose that this is my own work, not cheating, no copy paste, but my own creations. So this is the materiality convention and the disclosure conventions. Now let's talk about the convention. Now, as per this convention, when I'm maintaining the books of accounts, I should always ensure these are maintained as per accounting concepts, these are maintained as per accounting standards, and cheating, fraud, and risk I need to avoid. I should not put forward any fraudulent data, any fraudulent declarations, or writing practices which are risky and unethical and unprofessional. I remind the case study of Satyam, the TCS, Wipro, Satyam, they were making competition to each other. So they were in great fight. Who is progressing? That time, Infosys was a leading company, followed by Wipro and Cognizant. So when Satyam Computers has to declare results, suppose Infosys declares 13% dividend, the Satyam is to declare around 9 to 11%. But this dividend declaration was out of general reserves. This not declaration out of capital reserve. Because when I want to pay the dividends, I can only pay the dividends available profits. I cannot use general reserve. The specific reserves are applicable for the specific purposes. And in that case, they were cheating the people by the approach by using the malpractices, and then they burst out for irregularities in account writing. So conservative principle says an accountant is need to be very watchful, thoughtful, and he should always demand a proof and disclosure about any payment or receipts. For example, if I want to declare something as bad debts, or if I want to declare something as intangible asset, something as purchase as sale, I should have the proof for the sale. I should have the declaration for sale. I should have acknowledged that the things are happening, things are used, or things are made for the same reason. If the proofs or evidences are not available, then in that regards, the recording of the transaction is a cheating and it will become an unethical in nature. So we should always respect the expertise of the person. We should always trust or the need purpose of so, because if conservative things are avoided, then conservative convention is followed, then bookkeeping will have the particular interest and materiality to prove that the transaction true and genuine and there is no fraud. Now, any doubt in so far the three conventions? One is the disclosure, second is materiality, and conservative. Now, conservative uh, convention is a declaration, or I can say approach towards account writing. It is not directly saying that you should write this way or write this way, or I should not write this way. What it follows an approach that when I am being authorized to record the transactions, I'm being authorized to carry out the two effects of debit and credit. I should be logical. I should be thoughtful that if two identical things are there, whichever the best applicable, I should follow. I should observe. For example, if I purchase goods of in cash for 5,000, so I will make an entry, the goods account debit to cash because amount is 5,000. But if the goods are purchased of value of 4 lakhs, or I can take 40 lakhs, then we normally assume that this transaction, even the cash is mentioned, it is a bank payment. And then while writing the narration of such transaction, we will mention the bank transaction ID for our references. And this is called conservative, a logical application of principle to record the transaction in a systematic way, which will enable to avoid the losses, which will enable to record in such a way that materiality and evidence of that transaction is occurred. And hence, the conservative principle supports that accounting should do the writing of work, writing of accounts without any hesitation or without an concern of misappropriation or frauds. Let's further go on to the next convention. The next convention is consistency. Now, what is the English meaning of consistency? That if I'm doing something, I should be consistent in following the same thing. To be better understood, if I'm charging a depreciation by a fixed method, that is a fixed rate of interest, then I should follow in next accounting period the same method. Today I was driving the two-wheeler from front. Tomorrow I'm driving in reverse. Then day after tomorrow, if I just taking the two-wheeler in my hands and walking in by taking the two-wheeler, so this is not the practice. If I want to continue for more than one period, that is a going concern and entity concern, it denotes that whatever the practice of accounts you are following, they need to be observed similar practice in more than one accounting period. This year, I consider as 10,000 depreciation. Next year, I consider 6,000. Next year, I consider 15,000. So this is uneven practice of recording the depreciation. And what will lead to? It will lead to a chaos, confusion, fraud, and the situation where it will challenge the policies and procedure which are followed. So, as per this convention of consistency, we need to observe that our policies, our approach, and our methodology for recording the transactions, mentioning the transactions, and using the data inputs for comparison should follow a consistency. I can amend or I can change the rules of accounting, but I need disclosure. I need materiality to support my proof that I'm changing my account policy. In short, consistency means what are the logics, what are the principles, what are the theories, they are carried in for one financial year. At the end of that financial year, they are again shifted to new financial year and continues. If I want to do the alteration, then separate declarations and amendments in AGM is essential. I just merely thought that today I should have red color hairs, tomorrow black color, then day after tomorrow white colors. I can do it, but I should be consistent in changing colors. If I'm studying consistently, I become successful. If I study one day and forget the 10 days, then my response to my study is poor. And that's why when I'm writing the accounts, when I'm studying the accounts, I need to have a consistent approach or consistent way because if Today I'm writing by accrual basis. Tomorrow I'm writing on income basis. Day after tomorrow I'm writing as a sole proprietor. Then it is very tedious to compare, contrast, and comment about the performance. It will be very tedious and difficult to assess the progression. It is very complicated to certainly trace the reasons of expenditures. So that's why, whatever the logical accounting rules I'm applying, they should be consistent enough. So as per this principle, whenever accounting practice are followed by business entrepreneurs, they need to consistent or same from one year to other year. I just cannot decide that X practice this year and Y practice other year. I can do that. It is not disallowed. It is allowed. But I need to observe a particular process or method of declaration where the related parties and government at large, they should have a clarity or clear thought of process about the change in consistency. So let's understand the example. I already discussed this example. In 2009, I have straight line depreciation. In 2010-11, I have return on value. And 11-12, I have units measures. So here, when it is the straight line method, I have 5,000 rupees fixed as depreciation. When it is returned on method, the instead of amount, the percentage is finalized. So if it is 5,000 here and it is 10% here, I cannot compare them directly. It should have a particular relation. It should have particular understandings and particular things, because if I'm changing from one year to other, the policies, the formats, and the approach, it will create a chaos. So I cannot compare these 3 years. I cannot ascertain the gain and losses, as well as I cannot create trust in the people who are just related to my particular business. So these were the accounting concepts and conventions. Anybody has any doubts? I'll wait for 1 minute. Please put the doubts in, if any, in chat box. So we are done with the first unit. In first unit, we have purpose, scope of financial statements. We have purpose, scope of financial statements. We have users of financial statements, and then we discuss the major accounting concepts and conventions. So, what are the questions which are expected on first unit? The first question is discuss the scope and purpose of financial statements. The second question which can be asked is who are users of financial statement? Illustrate with example, or they can ask you to write a short note or discuss the role of one or two combination accounting concepts or conventions, or there can be long question that discuss the role played by accounting concepts and convention in account writing. But most of the time, that is 90%, on the first unit, you will be having MCQ questions or one line questions about accounting concepts, accounting conventions, and financial statements. So, the first unit of financial reporting, I hereby declare over. In this first unit, we elaborated to understand what is a financial statement. We talk about the people who are using the information of financial statement, that is internal users and external users. We talk about certain important accounting concepts. Now here it is mentioned as assumptions like going concern, consistency, accrual, and so on. Then we discuss about conventions. Now the conventions are recognized in your syllabus as quality financial concept. So they are materiality, disclosure, conservative, and consistency. So that's all for today. Tomorrow we'll start the second unit, that is Schedule 3 of Companies Act, and in short, how to prepare the balance sheet or final account. Now you need to log out from a meeting and join the common session of strategic management. Thank you. We'll meet again for final session at 8 p.m. Now you can log out and join the other session.